If your business is a C corporation or you have an entity that is taxed as an S corporation, you may have heard that you need to pay yourself a reasonable salary. I'm going to explain what a reasonable salary is and how to calculate one. Hi, I'm Jenny Schottmiller, CPA from Simple Profit. I help make accounting, tax, and financial topics easy and understandable for every business owner. The reason that corporation owners need to pay themselves a reasonable salary is that both a C corporation and an entity taxed as an S corporation have different kinds of taxes. So some of the income is taxed one way and some of the income is taxed another way. A corporation has owner's salary as well as dividends, and an S corporation has the owner's salary as well as profit that is paid to the S-Corp owner in the form of distributions. And because these amounts are taxed differently, the IRS wants to make sure that whatever work the owner's doing, they are being paid a reasonable compensation, which means that you're paying payroll tax. If your business is not a corporation and you are self-employed either as a sole proprietor, an LLC owner, or a partnership, you cannot pay yourself a W-2 salary. This is fine. Watch my other video about self-employed owners and how to pay yourself. It's important that business owners know that their salary is reasonable and are involved in the process. I would not leave the calculation of my reasonable salary exclusively up to my tax accountant. The tax professional is not the owner of my business. They don't necessarily know my industry, and they don't necessarily know the work that I've done in my business to determine that reasonable salary, and you as the owner have the most information to do that. I have a 6-step method to easily calculate a reasonable salary. At the end of the video, you're going to get a link to download the handout that I'm about to walk you through. Step number 1 is to consider past salary. So think about the last salary that you made before you started your business, especially if it's in the same industry that you're working in now. For example, let's say you were a marketing manager and now you've decided to start your own marketing company. What were you paid as a marketing manager? That's not going to be the same thing as what your reasonable salary is as an owner, but it is going to give us a benchmark. Say, for example, that in your last job you were paid $65,000 a year. Think about your last salary and write that number down. Step number 2 is to look at what other similar jobs are paying. So you can go to any career site or job search site and look up jobs similar to what you're doing right now as the owner and what those are paying. This is going to be a range of salaries, not just one number, because people have different levels of experience and different jobs paid differently. But again, we're looking for a benchmark to help us come up with a reasonable number. Say you looked at a couple of different job and career sites and someone in your field doing your job is earning between $50,000 and $85,000. We're going to write that range down. Step number 3 is to ask yourself, what would you expect as a salary if you went and did this job for someone else right now? Chances are you're doing what you need to bring revenue into the business, as well as admin and managerial tasks. So if you were to think about what you're doing now, it's likely more work than what you were doing in your past job working for someone else. But if you were going to go do this and run someone else's company, what would you expect them to pay you? What would be fair and reasonable? This could be a range or it could be a number. Let's say for this example, thinking about it for a minute, we'd expect about $75,000 in salary to do the job that we're doing right now. Step number 4 is to consider what profit our business is making. This might be the amount of profit we anticipate making or that we're on track to earn. And this is important because if you don't have profit, you don't have to pay yourself a reasonable salary. Now, of course, it makes sense that you would want to be able to take cash out of your business if cash is available and you need money to live off of. But the salary is how you're going to be paying payroll tax, and you are not required to take a W-2 salary and pay payroll tax if your business didn't earn any money yet. But if your business is making money, you are expected to pay yourself a reasonable salary, so write down the net profit. In this example, let's say our business is on track to make $120,000 of net profit this year. Step number 5 is to consider the amount of net profit that you have earned as the owner yourself. So if you don't have any employees yet because your business is very small, then this is going to be the same number as the total net profit that your business has earned, because you're the only one working in your business, and so you're the only one bringing in that money. But if you have a team of employees and Let's say your business is based on sales and you brought in about half the sales yourself and your team have brought in the other half of the sales, then this owner earned number is going to be half of the total earned. It's going to be the amount attributable to you because you don't have to pay yourself a reasonable salary for your employees' work. Your reasonable salary needs to be based on your own work as the owner. It's okay if you have to ballpark this number. We're looking for a reasonable salary, not an exact salary. If you have any reports that would help you figure out this number, that's great. If not, it is okay to estimate. Let's say in this example, we know that about $95,000 of the profit is attributable to our own work and not the work of our employees. So we're gonna write that number down. Step number 6 is to take all of those numbers and step back, look at them, and determine where we think is going to be reasonable. In this example, we have a wide range from $50,000 on the low end to $120,000 on the high end, but we can narrow that down quite a bit. The key to determining a reasonable salary is using reason and thinking about what's reasonable to you as the owner. We don't want to think about trying to manipulate our taxes because that's not really going to help us. They really do want us to pay a salary that is fair for the work that we've done. So if we think about this, probably should be earning a little more than what we've earned in the past because we're doing more work. And we definitely don't need to earn everything as income. If we brought in $95,000, it's okay that some of that is going to be attributable to profit and some of it is going to be attributable to salary. So if I step back and I look at this, I might come up with a different number than you will, and that's okay. In my analysis, I'm thinking I want this number to be somewhere between $70,000 and $95,000. So it's a smaller range to work with. And I think if I pick a number anywhere in that range, it's probably going to be reasonable. This is the point at which it's not a bad idea to check with your accountant. You've already done some analysis. You've already come up with what's probably going to be a reasonable salary, and running it by your tax professional, seeing if they have any other thoughts or if they feel strongly one way or the other within that range allows you to have a discussion. And if you both together think that your salary is reasonable, then it's very, very likely that you've come up with an appropriate salary to pay you out of your corporation. A couple other things I want to make sure you are aware of is that this has to be a W-2 paid salary. So using a payroll company to pay your salary out is important. If it's the end of the year, and maybe you didn't even know you were going to make any money this year, and you haven't paid yourself a salary yet, you can run a payroll for yourself in December to get that payroll tax paid and make sure that you get a W-2 so everything is pulled together for your taxes. December is a great time to check with your tax professional. I've put all of this together in a handout that you can download and make it really easy for you to walk through this process. Just go to simpleprofit.com/reasonable salary and get the free download. At Simple Profit, I'm always creating things that make being a business owner easier, so check out these other videos that might also be helpful and useful. Let go of the kitty and let the kitty go where the kitty wants, because my accountant is not the... Who is calling me? Both of you let go of the kitty and that... What are you doing? Don't touch each other.